let us review the major events in global markets last week. On Monday, the shares of American and European companies recorded the most severe slump in 4 years. Investors sold off their assets on worries that the slowdown of Chinese economic growth would adversely affect the global economic growth. The dollar index closed 1.7% lower, while S&P 500 lost 3.9%. On Tuesday, the European stock markets began pulling back. The Stoxx Europe 600 index advanced 4.2%, almost recouping the fall of 5.3% on Monday. Investors' optimism was supported by data from the German IFO Institute, according to which the business climate and current assessment indexes for August performed better than expected. On Wednesday, the Japanese Nikkei rose 3.2% on the back of depreciating yen. Expectations that the Federal Reserve may delay the rate hike contributed to the boost in investors' confidence and growth of the U.S. stock market. The Shanghai Composite Index advanced 5.3% on speculation that the state funds had resumed buying stocks to support the market. On Thursday, gold prices declined given the positive statistics from U.S. In the second quarter, the U.S. economy grew by 3.7%. The rice quotations have slightly retraced during the last 2 weeks. Note that the grain futures prices are slightly behind the rice price growth. The soy price on Monday hit a fresh 6-year low, showing an increase of more than 2% for the last 2 days. The U.S. Department of Agriculture revised up the outlook for export season 2015-2016. On Friday, the growth on the world stock market stumbled on the statement by the Federal Reserve Vice President about the possible rate hike. According to the interest rate swaps, presently the market estimates the probability of this at 35%. The possible rate hike by the Federal Reserve supported the dollar index, which pulled back from its 3-month low. Nevertheless, at this moment, its increase has stopped ahead of U.S. statistics releases. This week, we recommend you to pay attention to the U.S. labor market statistics to be released on Friday, the jobless claims and the change in non-farm payrolls. We believe these indicators will settle a dispute on whether the Fed will raise the rate in September or not. This was all for the week. Happy trading and see you next week.